What is up, Pi holders? We need to talk. Is this the end of Pi coin? Or is something big about to happen? The price is crashing, Binance is silent, and people are panicking. But listen up. This could be the biggest shakeout before an explosive move. Let's break it all down. Pi coin has experienced a significant decline of approximately 30% over the past week, aligning with broader cryptocurrency market corrections. The recent sharp decline in Pi coin's price has triggered panic selling among retail investors. This reaction is common in volatile markets, where sudden drops create fear and uncertainty, leading many to exit their positions to minimize losses. However, this mass selling often contributes to even greater downward pressure, further accelerating the decline. One of the main reasons for this behavior is herd mentality. When investors see others selling, they follow suit, fearing that prices will continue to plummet. This can create a self-fulfilling cycle, where increased selling leads to further price drops, prompting even more people to exit. Additionally, many retail investors lack long-term conviction in their holdings. Unlike institutional investors, who have larger capital reserves and strategic patience, retail traders often react emotionally to short-term price movements. This allows whales and institutional players to accumulate Pi coin at lower prices while smaller investors sell at a loss. However, not all retail investors are selling. Some experienced traders see these dips as buying opportunities, using market corrections to accumulate more Pi coin at discounted prices. This group follows the philosophy of buy the dip, anticipating future rebounds once market conditions stabilize. Are you panic selling or holding strong? Do you see this as a temporary downturn or long-term opportunity? Drop your thoughts in the comments. Whale accumulation. Despite the sell-off, there are indications that large investors, known as whales, are accumulating Pi coin during this downturn. Whale accumulation can signal confidence in the asset's long-term potential and may precede price stabilization or recovery. Some analysts believe that Pi coin's recent price movements may not be entirely organic. Instead, market manipulation tactics could be at play, orchestrated by institutional investors or large holders, often called whales. During sharp declines, whales often accumulate assets quietly. This is called stealth accumulation. They take advantage of fear-driven sell-offs, buying at discounted prices without triggering large price spikes. This allows them to control a larger share of the circulating supply before prices recover. Another potential manipulation tactic is wash trading, where the same entity buys and sells to create the illusion of trading activity. This can make a coin appear more volatile or stable than it really is, influencing investor sentiment. Some traders also suspect stop hunt manipulation, where large players intentionally push prices below key support levels to trigger stop-loss orders. This forces smaller traders to panic sell, allowing whales to buy Pi coin at even lower prices before pushing it back up. If manipulation is occurring, the sell-off could be temporary, with a strategic accumulation phase happening behind the scenes. Once whales secure their positions, Pi coin could experience a sharp rebound, potentially catching retail investors off guard. Stay informed, stay patient, and don't let fear-based moves dictate your strategy. What do you think? Is Pi coin being manipulated, or is this just normal market behavior? Drop your thoughts in the comments. Hoka News. The recent 30% decline in Pi coin's value appears to be influenced by a combination of retail investor panic selling and strategic accumulation by larger investors. While market manipulation cannot be definitively confirmed, patterns suggest that current price movements may not solely reflect natural market dynamics. Investors are advised to exercise caution and conduct thorough research before making investment decisions in such volatile environments. This isn't the first time we've seen a crypto go through a brutal dip before skyrocketing. Remember what happened with SHIB, Doge, and even Bitcoin. History may be repeating itself. Pi coin has garnered significant attention due to its potential listing on Binance, one of the world's largest cryptocurrency exchanges. Despite meeting many of Binance's listing criteria, the coin has yet to be listed, leading to various speculations within the crypto community. Binance maintains stringent listing requirements to ensure the quality and reliability of assets on its platform. These criteria include full liquidity, decentralization, compliance, and a stable, fully operational network. While PiCoin has made substantial progress, some reports suggest that it may still be in its development phase, operating on a testnet, which could be a factor in the listing delay. Speculations on listing delay. The delay in PiCoin's listing has led to various theories. Strategic timing. Some experts believe Binance might be waiting for an optimal market moment to list PiCoin, potentially aiming to maximize trading volumes and profits. Market positioning. There's speculation that Binance could be timing the listing to coincide with favorable market conditions, possibly to capitalize on increased investor interest. Potential impact of Binance listing. A Binance listing often leads to increased visibility and trading activity for a cryptocurrency, a phenomenon known as the Binance effect. Meme coins like Shiba Inu, SHIB, and Dogecoin, Doge, experienced significant price surges following their listings on major exchanges. If PiCoin were to be listed on Binance, it could potentially see a similar increase in demand and price. Binance has engaged its community in the decision-making process regarding new listings. For instance, a recent community vote titled "Should Pi be listed on Binance?" allowed verified users to express their opinions on the potential listing of PiCoin. While PiCoin has made significant strides toward meeting Binance's listing requirements, the final decision rests with Binance. The crypto community remains optimistic, anticipating that a Binance listing could position PiCoin alongside other successful meme coins, potentially leading to substantial market movements. Investors are advised to stay informed and exercise caution, as the cryptocurrency market is highly volatile and influenced by various factors. PiCoin has recently exhibited signs that may suggest a potential recovery. Over the past 24 hours, PiCoin's trading volume has exceeded $439 million, indicating heightened market activity and investor interest. Despite recent volatility, PiCoin has maintained support above key resistance zones, suggesting potential stabilization. Speculation about potential token burns or adjustments to PiCoin's circulating supply has emerged, which could reduce supply and potentially enhance value. Community members, such as Ahmed, express optimism. PiCoin isn't dead. It's being tested. Holders who survive these dips could be rewarded big time. While these indicators are promising, the cryptocurrency market remains unpredictable. Investors should conduct thorough research and exercise caution before making investment decisions. Recent developments within the Pi network community have sparked discussions about potential reductions in PiCoin's circulating supply, which could influence its market value. The Pi network's coin supply has decreased to approximately 6.99 billion tokens, down from an initial 6.3 billion at mainnet launch. This reduction is attributed to standard network processes, including the burning of transaction fees and the removal of coins from unverified KYC accounts, rather than a deliberate large-scale coin burn event. To manage token issuance, Pi network has implemented monthly reductions in the base mining rate using a variable exponential function. This approach aims to gradually decrease the number of new tokens entering circulation, creating deflationary pressure on the existing supply. Reducing the circulating supply can enhance scarcity, potentially leading to increased token value if demand remains constant or rises. However, the impact of these supply adjustments on PiCoin's price is uncertain and may primarily reflect routine network operations. While recent supply reductions and mining rate adjustments aim to create deflationary pressure on PiCoin, their effect on its market value remains uncertain. Investors should monitor these developments alongside other market factors when considering PiCoin's potential. Subscribe and smash that like button so YouTube pushes this crucial update to more Pi holders. The crypto market moves fast, and staying informed is the key to making smart decisions. Whether PiCoin is gearing up for a massive comeback or facing more turbulence, we're in this together. Let's stay strong, stay informed, and most importantly, stay ahead of the game. Drop a comment with your thoughts, and I'll see you in the next one.